The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 23rd, terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we do everything we can to have an extraordinary day, afternoon, evening. Of course, an extraordinary life, that would be a good thing. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right, that little 2x4 ship. It'll make all the difference in your world out there. And after all, that's what we want to do here at TFNN each and every day. Because when you can find the good in every set of circumstance, the gift in every set of circumstance, that means that you can find, well, you can find the gift in everything. And that's really what life is all about. No more truer than today. I've been away from my screens all morning at a funeral, so it's kind of a, you know, just to say it grounds you a bit. So we're going to go take a look at what the markets are doing, because I really just about 3 minutes ago hopped into the seat out here. So we're going to start from scratch and try to get a feel for what's going on. Of course, I'm absolutely grateful for your presence here today. Now, I'm here to serve you, so that means you can go ahead and pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out and touch us at that sounded pretty bad, 727-445-1044. You know what I'm talking about. This is Terrific Tuesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got flat markets out here. We've got the Dow off 3 points. The S&P is down 2. NASDAQ Composites off 9. Russell 2000 is off 57 cents right now. The DAX closed up 82 points. The FTSE up 9 out there. Goldilocks, what's that doing here? Where's gold? Gold's off $6.60. Silver's off 40 cents. That's quite a move here in silver. She's trading out at 15.74. Light sweet crude up 7 pennies. So we got a flat market out there. But it's not flat in currency world. The euro-Japanese yen is dive bombing. It's a fairly good-sized move to the downside. We'll take a look at that. But as I said, let's strap in and try to figure out what these markets are doing, what the message of the markets are as we speak right now, 1:09 p.m. on June the 23rd out here. Let's start off because, you know, it's not often that I get a chance to do this. And when I say do this, I don't mean coming to you live here, but it's not often where I jump in the chair and just an hour ago, well, an hour and 3 minutes ago, to be specific, we had the moon, which was at its furthest point from Earth during this lunar cycle. That's referred to as apogee out there. Actually came in at 12:06 p.m. Now, that is an important, there are many tools in my bag out here, my little tool, my arsenal of trading tools, and they're great. They're extraordinary tools. And at least I believe they're extraordinary tools. One of those most extraordinary tools happens to, in the most consistent. I know that there's a lot of discussion about different celestial type planets and lunar type strategies. In fact, you know, I got in this jump seat here during a period of time when Larry Pesavento was away on vacation, and Tom asked, you know, would I be interested in filling in or what have you, and I said sure, and I asked Larry, I said, hey, because I had been creating this well, I had this chart where I just kept track of every new and full moon and a trading strategy around the S&P 500. And some of you may have even, you know, heard that, you know, it's years ago now. But what I found over time is that the new full moons have an impact on gold more than anything else. That's just simply my experience. You know, the percentage of times with regard to full moons, they have more of a positive bias, by the way, when it comes to the stock market. At least that's what my experience has been. But there is no more significant event when it comes to lunar or celestial planetary type alignments out here. None more important than apogee and perigee. None. bar none out here. This is the most amazing thing. And so that happened about an hour and 3 minutes ago. And what you and I like to do when that occurs, we like to go take a look at the S&P futures contract. Maybe it works on the other futures contracts. I don't know. I just pretty much stick with what I know that works out here. And here's a 10-minute chart. And at exactly 12:06 p.m. this afternoon, when Apogee came in, the ES Mini was trading at 2111.75. In fact, then it's so odd because here you're looking at a 10-minute chart. All right, if you're watching this on Tiger TV, I guarantee you that at the price point of 2111.75, it ain't no swing point out there. And you know how important swing points are when we take a look at trading and in order to be able to provide us with information. Look, it works that way on a daily chart, a monthly chart, a 10-minute chart out here. And the cool thing is, and I can't tell you why this works. Actually, I have a theory why it works, but I don't want to be... and I'm not quacked out or anything like that. Far be it from that. But there's really no reason for me to share with you something that I can't definitively tell you whether or not my conclusion is real. The conclusion I can tell you that's real is if you trade the S&P futures contract and you do not utilize this, you are just simply leaving the most valuable tool that I know of. For trading the ES Mini. And so it's a beautiful time out here. So we're going to find out. We're in a nice uptrend, right? You know, Stevie, he called. He said, hey, the market last week was just really in the that it was just trying to find a bottom in order to move higher. I still believe that we've got higher to go. We may have a little bit lower to go before we have higher to go. And what you and I are going to be keeping track of during the course of the next several days, it's going to be that 2111.75. There is no important, at least as we speak right now, no important price point than that 2111.75. You can see right now, since it came in at about, well, since it came in during this last hour, you know, it's actually been tested several times out here. It's been tested and it held as support thus far. If we see price move below that, it says, look, you actually want to be on the short side. Now, with regard to intraday trading, it's actually one of the few times, one of the reasons why I'm doing the afternoon shows versus the 9 to 11 show out there is it just simply in this market here, we are in a what we'll call a non-directional market. All right, the Dow basically hasn't moved too much. And so it was doing 9 to 11 was absolutely, I was just simply not that good of a multitasker any longer because the trading decisions had to be made pretty quick. It also made it difficult for me to trade the opening range out here. Too many screens, too much stuff going on. And so it's just so much easier to do the show during 1 to 2. Because the market is relatively quiet. Of course, today is a bit of an exception out here because you can play really both sides of this trade out here. I would say, as we take a look at this 10-minute chart, and you move below 2108 out here, 2108.50, and the market's going to go ahead and pull back lower. Now let's go take a look at places. And likewise, if this area holds as support out here, it's saying you really don't want to be short the market, or at least not just yet. I can't tell you whether this tick out here that took place at 11:20 yesterday afternoon, whether that was the intermediate term top or not. Could be out here. But what I do know is we've got a price point out there that's more valuable than anything when it comes to your trading and investing. We don't have to worry about whether that 2121 area is a key level. We just need to watch 2111.75 out here. Now, if we go to a little bit, that 10-minute chart out here, we don't want to be necessarily from a show perspective, trading based upon that time frame. But let's come and take a look. That was this way. You know, I said, hey, if price gets below 2108, it's likely to fall. Where's it likely to fall to? Well, here's an interesting chart. If we take a look at this 30-minute chart out here, and we'll get to the longer-term chart. So we got all afternoon. Actually, we only have about 45 minutes out here. But as we take a look at this 30-minute chart, we put another tool out here, great tool. This tool here, originally developed by Bud Ross, but Stevie's got a tweak on it. And that tweak is, here we're looking at the ES Mini. We're looking at a 30-minute chart, by the way. You're going to see two dashed golden, because they are golden lines on my screen out here. And those are the horizontal trading ranges. Bud called them primary trading ranges. But his system is a bit different than mine. Mine is different in the fact that I've got this all automated. So it's electronic. So I don't have to go searching visually for co-located. That means it doesn't matter whether it's an open or a close. Co-located opens or closes to try to identify where the largest number occurs at. Because that often acts as our boundary levels, our little fences out here that seem to contain price or act as support or resistance out here. Interestingly enough, we got 21.1175. You know that you and I are going to be paying attention to that. Right above that at the 21.1250 level, we've seen 30 points of contact during the last 1,600 bars, with the exception of the time frames from 5:15, 5:16 in the evening until about 6 a.m. I believe it was 6 a.m. is my time frame when I go ahead and kick things in. Now, the only danger with that is that, and I'll have to go back and take a look at it, is I'm missing the open in Europe. I'm not so worried about the open in Asia. Typically doesn't have the most significant impact on the U.S. markets. It can, but it's usually not a significant impact. Europe, a little bit different story when the U.K. and the German DAX open up out here. But in any event, so this is telling us here that we've got really good, strong levels of support. 21.1175, 21.1250. If we see a close below that, price is going to drop down to 2100. Even Steven out there, you can say, Steve-O, how the heck do you know that? Well, look, I can't control where price is going to go. But what I can tell you is if you believe that the past repeats itself, and that's why I don't want you to be a prisoner of your past, not unless it's a really good prisoner. If you're being a prisoner of your past, it's usually from a negative thing. So being a prisoner of your past is not good. But inside the stock market out here, when we take a look at trading and investing, it is a prisoner of its past, and that's the cool thing. And so the cool thing is that if price breaks through one level of support, in this case here, it's two levels of support, guess what? Price is going to fall to the next level of support out here. That's going to be right around the 2100 area. Hey, that's a nice trade. 2111 to 2100 out there. That would be and that would also, interestingly enough, just simply come back to the gap up from Sunday evening. So if we were going to just simply take a look at gaps out here, that would be normal. Now you get below. There's, by the way, 42 points of contact at that 2100 level out here. So price has gotten very comfortable with 2100. And I think that it really wants to see it again. The question is going to be, when is that going to occur? Is it going to just simply wait until, overnight hours, early morning hours? I don't know the answer to that, but I do know the levels that you and I need to be paying attention to. I know I've spent a lot of time on this, but hey, I am just getting back in the driver's seat out here, and I'm focusing you on the areas where I would be focused the most. Right now, if I just came bang, fresh to the screens, what is it that Steve was going to go ahead and take a look at? I guarantee you, these are the areas. And as we go into the break, I'm going to go ahead and set up a trade so that automatically it'll kick in while we're on the show. I won't have to worry about if, in fact, it happens. No idea whether the trade will work or not, but I know the parameters that I'll use to go ahead and set that up. So we get back from the break. Let's go take a look at what's going on inside the rest of the market out here. Let's go take a look at the currency market because it's on fire to the downside, so to speak, out here. We're seeing a fairly decent reversal inside the euro, Japanese yen. Not too dangerous, not too bad out here. But it does look like it wants to head a bit lower, maybe in about the 134.50 level. Time will tell, though. When we get back, let's go take a look at the summation index. Let's go take a look at the VIX index. Let's take a look at anything that you'd like. But you got to reach out. You got to reach out and touch someone. 877-927-6648. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming, see high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 5, S&P is off a point, composites down 5. And a question that came in was somebody said it sounded like I was looking at the short side of the market. And Johnny, ring that bell. Ding, 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 ding. They were right. I was looking at the short side of the market. Now, with regard to perigee and apogee, in this case here, you can play it to either side. Right now, as I'm doing the radio show, it's just easier for me to decide on which side of the market am I looking for the trade to go ahead and trigger the advanced order that I put in there. And the reason that I'm looking at the short side for the moment, and I'll come back and I'll reassess everything later on. But if I take a look at patterns that have completed inside the market out here, let me do this here. Here's our 4 different futures contract, and we now have. Earlier this morning, I didn't think that it was possible. I was kind of scratching my head, saying, how is this actually going to work out? What I'm referring to is if you're watching my screens here on Tiger TV, I hope you are. Upper left-hand portion of my screen is the Russell 2000 daily futures contract. Upper right is the Dow. Lower left is the S&P futures, and the lower right is the Nasdaq. Now, what I've got identified on each of these charts are levels of resistance out here, patterns that should complete. And patterns did complete out here. If you take a look at the Russell 2000, I'll just go ahead and expand this up on my screen here for you. What the Russell has done, you're going to take a look at two yellow lines on my screen. And if you look at the swing point from April 15 down to the low from May 5th, if you were to take those two swing points and you were to go ahead and take that difference multiplied times 1.272, add that to the low of May 5th, that'll take you up to the price point of $12.9068. Now, price does not have to stop at a 1.272 expansion, but oftentimes it's where price will get tired, take a rest, maybe reverse from. Well, if you take a look at the Russell 2000, the intra-session high, well, I'd tell you what it is if I actually had my data window on. There we go. The actual high is 1291.50 versus 1290.68 out there. You got to love that. So that pattern has completed itself. It's likely at a point in time when the market ought to consider moving sideways, pulling back. It's more likely those two versus continuing to move forward. If I take a look at the Dow, this is so interesting that actually all these patterns really did come together here in the four futures contracts. If I take a look at the Dow futures, I go from its swing point high out here from May 19th down to the low on June 16th. The 0.786 retracement is the number that actually was hit. Looks like it was hit almost to the tick out here, but let's go find out. Let's put that data window up. The number that we were looking for was 18,111. The actual high, 18,108. That's a beautiful thing out there. So that pattern of getting to the 0.786 area, that is done and over with. Oftentimes, that can be a place where price will reverse from. Doesn't have to. But when we put all of this in context here, that context being, if I take a look at what the S&P futures are doing, they continue to trade around the May 19th swing point, the bottom of which is 2113.75. You're trading at 2113.25 as we speak right now. Now, here's the wild card out here, in my opinion. It's really the S&P futures because it's so close. It's like it wants to go test that 21.26. It's like we want it on that wall out here. The question is, will it be able to get up to that wall right now? And he closed below 2113.75 today, and we will have 3 of the 4 that we've looked at, potentially 3 of the 4 that have completed patterns out here. I don't know how the market closes at 5:15 today, let alone the 4 o'clock cash sprout here. But if I take a look at the NASDAQ, this is also interesting. What do you have at the NASDAQ here? You got a swing point from back on April 27, 45.41.50. We know that's a strong area of resistance because if it wasn't, the trading day after May 27, where there was a huge swoon to the upside, big wide-ranging bar, as was coming into resistance, price should have been able to overtake that line. It couldn't. I can't tell you why. I can just tell you the troops are lined up at 45.41.50. Nothing could be more certain about that than when we take a look at the trading range here from June the 18th. June the 18th, you talk about a wide-ranging bar moving into that 45.41 level, and it's not been able to get up and over that. Now, look, if it does clear that area, if the Russell does get above its a 1.272, then price is just simply going to gravitate higher. We've got no reversal signals out here. The Dow futures looks like a shooting star candle, but until the trading session, that's not. It's really not. It's a little doji. That's all that it is out there. A little doji in Stevie's window. But nonetheless, I do know that price has come into resistance areas, and the market ought to begin to struggle. It's an early warning sign. It's an early warning sign at best at this stage of the game. But the cool thing is, if my assumption here is correct, if I'm reading the charts correctly out here, that's where it's so cool that we can go back and we can take a look at the apogee at the 21.1175. I guarantee if our markets are at intermediate term highs, we're going to see a close in the ES mini below 21.1175. Otherwise, it's all forces to the upside. It's still a bullish market out here. We just have some things to take a look at. This is Steve with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. If we take a look at leaders in the clubhouse out here, you've got Amazon. That's up $9, 2%. Ambarella's up $7 after getting hammered yesterday. Priceline's up 7. Nettie's is up $5. Green Dot's up 5. Tesla's up $5. To the downside, Clovis Oncology off 5. Almost Family down $4. Sonic Corp off 370. Eagle Pharmaceuticals off 370 as well. Those are your leaders, dollar-wise, the upside and to the downside out here. Let's take a look at currency pairs. Let's go take a look at the euro Japanese yen. You can see trading towards the low of its trading range here today, starting to become a whitish type ranging bar out here. You get the little shooting star candle on June the 4th. Price not been able to overtake that level, 141.05. The first level of support on this pullback out here is 137.41. Further than that takes you to about the 134 level. You like to see this currency pair because it's a liquidity gauge moving in the direction of the market. Right now we've got a little bit of a divergence out there. I don't know exactly what that means. I do know that currency pairs can oftentimes be the, you're looking for clues as to what the market wants to do out here. It's as if the currency pairs, because that's where you get the real buckos at stake out here. It's as if currency pairs can sniff out what's really going on behind the scenes out there. It's why you and I pay attention to the euro-Japanese yen currency pair. If we take a look at the euro versus the U.S. dollar, we'll see that price has been a nice little rising price channel out here. And that's off of these lows from April 13th. And so we've got price pulling back. It's pulled back to its TAS point of control level, where bulls and bears, buyers and sellers are most comfortable with price. But it looks to me like the euro versus the U.S. dollar is going to pull back all the way down to the bottom of that rising channel line out there. Today, that'd be priced about 1.106, somewhere right around there. Tomorrow would be just a tad higher, 1.107 or so. So we'll see if that area gets tested, rejected, or if we see a break in this area, which would be a change in a short-term change in trend inside of the euro. That's what's going on in that currency pair. The Japanese yen versus the U.S. dollar, that's trading higher here this morning. Let's go see what is it doing. Not a ton. Really not a ton. If anything, it looks like, still looks to me like the more of a, it's got two patterns that I can't tell which one. It's either making an A to B equals C to the upside or an A to B equals C to the downside. I cannot for the life of me. Yesterday, I believe that it was to the downside. That was partially because we took a look at price traveling below its TAS market profile low. Today, it's up above that level. So I'm kind of, I'm going to take a neutral position here because I can't tell you which of those two patterns it's going to complete out here. Probably have to go down and take a look at some shorter term charts to figure that one out. And we're just not going to do that right now. If we take a look at the Great British Pound, you can see it's a nice little rising price channel out here. That's off of the lows back in April as well, April the 13th. That area is not in jeopardy as we speak. It looked to me like the Great British Pound was really going to make a run for the top of that rising price channel out here because it had broken above resistance, which was the May 14th high. Did with a nice little, the wide-ranging bar on June 17th and then some follow-through on June 18th. But you're back below that level out here. Really, the best buy on this on a daily basis would be to see price pull back into the channel line out here, somewhere around the 154-ish type area. That's on the Great British Pound. Not saying that that's where it's going to pull back to, but if it did, that would be your buying opportunity. Inside the commodities out here, meaning gold, silver, light sweet, crude, natural gas, let's take a quick peek at those, see what they're doing here. Here's Goldilocks. Actually, let's go take a look at this chart. Here's my two charts for Goldilocks. These two charts are the upper portion is gold priced in U.S. dollars, and the bottom chart is gold priced in euros. Now, the one that's priced in euros is delayed by 15 minutes because of the data feed inside of the euro versus the U.S. dollar, but close enough as we speak right now. You can see inside gold, what Stevie expects out here is I expect to see gold go ahead and pull back to the bottom of that little trend line. This is really just a trend line from November 7th. I'm just using the low of November 7th, and then I'm using the low of March 17th. Gold's already really, well, has it really broken a trend line? Short-term trend line, yeah, it's broken a very short-term trend line. That would be this one, but that'd be this right here that you'd be taking a look at. But that's really ultra short, and the day's not over, so maybe price holds that area. I'm not going to spend too much time on that trend line out here, and I suspect that now the question is, will that become a buy or not? What I'd like to see is I'd like to see both gold and gold price in dollars and gold price in euros come back and go back and test their trend lines out here. In the case of euros, it's gold priced in euros at about 1,000 euros. 998.7 is what shows up on my screen. So right in that range, which is where we saw a nice break of Goldilocks back here in January 6th, to be specific. That upper trend line, that red diagonal line on the upper portion of my screen, that is major resistance inside of Goldilocks. So nice trading range, but you really want to catch it down what looks like in about the 1150-ish type area, give or take a few bucks out there inside of gold. In the case of silver, I don't have any correlation chart in the case of silver, but if we go take a look at it, see where it's trading into 40 cents, 15.74 as we speak right now. We're going to see it's back below a 0.786 retracement. That is the retracement off of the March 11th low, the top of which, by the way, is 15.76. You're at 15.74. You're moving. I don't know what the volume is on that swing plate. I'd have to go back and take a look at that contract out there. But what we do know is if you close, whether it's volume or not, if you close inside a swing point, 1576 today, you're likely to go test the low of that, light volume or not. If it's with volume, it says, hey, I'm going down there and I'm going to test that no matter what you want me to do. And that would be $15.31 out there. So at this stage of the game, it looks like that is what Hi-Ho Silver wants to do. In the case of light sweet crude, not a whole lot here that I can see, but it looks to me more likely than not that light sweet crude is coiling up and getting ready to make its next move higher out there. I say that because you recall, you've listened to the show long enough, you know that when we take a look at light sweet crude and I say currency pairs, they rule, baby. Well, when it comes to light sweet crude, the currency pair that rules are the Canadian dollar and the Mexican peso. And I did take a look at those. I'm not going to go look at those right now, but when I did look at those over the weekend, it looked to me like those were getting ready. Those were giving us a signal that light sweet crude ought to begin to move higher. It doesn't tell me the day. I don't get the, when it sends out the invitation, it's just kind of like the invitation, I'm getting ready to do this. It just doesn't give you the actual day out there. But that's what it looks like to me in the case of light sweet crude. With regard to natural gas, that yesterday was testing the 0.786 retracement. Area looks like it's done the same today. The low so far 271. Yesterday's low 271. So we haven't seen any kind. There was a real opportunity. Actually, today there's an opportunity for a key reversal day. Let me see. An outside day. We'll call it an outside day. But at this stage, no bullish reversal signal here. If it can't hold this 270-ish area, 264 is going to be its next stop on the way down. That covers the currency pairs. We took a look at commodities. We took a look at, certainly, I think I covered the ES Mini. And with regard to the futures contract, where things are at out there. So now it's time to move on to maybe a couple of charts out here and try to get a feel as to what's going on. Let's take a look at Clovis Oncology. Ooh, that's not a good-looking stock chart at all here today. Well, I take that back. You got to pull them back. If we take a look at Clovis Oncology, let's do this. Let's clean up our palette out here just to make it a little bit easier for you to take a look at. As we clean up this palette inside Clovis Oncology, what you're going to see is it had a nice little breakout session right here. That was on the trading day of April 13th. No idea what they cured, but they did cure something. 2.8 million shares traded at that level, and price pulled back into that price point of 78.16 with 800,000 shares. That's a nice test of a area of support. So 78.16 is your area of support. And then this Clovis Oncology, big, wide-ranging bar on May 14th out there with 3.4 million shares to the upside. At some point in time, that 102.28 level likely gets tested out here. And that is it looks like a high. And that's at least a 52-week high, if not all-time high out here. But the better trade inside of CLVS as the ticker symbol is at the 78.16 area out here. CLVS again being the ticker symbol. You've got Sonic Corp out here. SONC is the ticker symbol. Now that's gapping down with volume. Now, is that Sonic the Burger Corporation or what have you? But on a supersonic note, it's headed down here into an area where it broke out from, which is $27.65. Now, it had a nice wide-ranging bar, 5.2 million shares to the upside. But today, you got wide-ranging bar to the downside with even more volume, 6.7 million shares. So 27.65 looks like that's the number for ticker symbol SONC out there. And that may not even be the buy with regard to the volume as it comes down to that area. We won't know until we see that 27.65 level get tested out here. Let's see. What else do we have moving inside of the markets? Let's look at Amazon, see what Amazon is doing. MAZN. Give me 1 second. Give me 1 second here. Sorry, folks. If we take a look at Amazon, AMZN, this thing is moving. It's going to look like it's going to go test the high here from April 24th, and that's out at 452.65. You're at 446.92. Volume today about 1.9 million shares. So it looks like it's going to go ahead and at least test that high out there, 452.65. If we take a look at Priceline, PCLN is the ticker symbol. What is this thing here doing? Looks like Priceline is on its way down to that 1129.98. Nice breakout volume there. That was 2.6 million shares. Pullback today only, you're only done 275,000 shares. You'd like to see it come back and test 1129.98 and hold. And then you've got a trading range up to about the 1226 area out there. Steve-O, give me a high sign. Let me know if you've got me covered here. We've got, what else is moving? You got GDOT. Okay. GDOT is a ticker symbol. And that is up 36% out there. How about that? Folks, this is Steve Rhodes with TFNN. We'll be back to you as soon as we can.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease, no worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 14. S&P is flat. The NASDAQ Composite is flat as well. Let's go out to Orlando to Rich. Rich, thanks for calling. Thanks for holding out there. How are you today?
I'm doing very well, Steve. Pretty warm here in Orlando.
It is warm throughout. I think it's warm throughout most of the country.
I think you're right. But it seems to be warmer here.
Yes. You wanted to take a look at the DGAZ, the velocity share 3 times inverse for natural gas. Tell me what you're doing and how I can assist you.
Basically, I've been trying to trade natural gas itself using the UGA and the DGA. Currently, I'm in the DGA at around $5.70. So I'm in the money. It's a question here what does the natural gas look like it's going to do? It looks to me like it still wants to break down below the 275 area, but it's just like it's just hanging there. So that's really the question.
Yeah, it really is contained there, and what's containing it, as best that I can tell, Rich, are 2 things. Those 2 things, one just being a natural retracement level, and that's from the low, from the June 4th low to the high on June 17th. And the exact 0.618 retracement level is $2.708 out there. So that's one of those containment areas. Another containment area is the candle session from June 9th, which was really a breakout area. And that was with a nice wide-ranging bar to the upside. So, the bottom of that happens to be at the point of control on the TAS box out here, 269. But it has not shown us, other than those have been a natural area of support, it has not shown us that it wants to reverse higher and move. And I was trying to identify whether or not today could potentially be a key reversal day with just one tick closer, but the answer is it really can't. The low of yesterday has not been taken out, at least according to me. Well, right. Maybe it has. Maybe it has just by the slightest amount out here. You've been successfully trading the DGAZ. You're in the money on that. If with regard to market profiles, things maybe for you to take a look at out here. Support on this is probably 563. You don't want to see it get below 563, and you may run out of steam as this gets to the 652 level out there. But of course, DGAZ is going to trade. It's going to disregard any of these levels out here because it's going to trade based on what the contract is doing.
Correct.
So.
Correct.
Yeah. So, but you're kind of at a point here where it either reverses and it heads north, and that way the DGAZ is going to pull back, or it does move down to its next level on the contract, and then DGA is probably headed to that 650 level. Does that help you?
Yeah, a little bit. I mean, I was looking forward to, like I said, I'm obviously looking for natural gas to go down and looking for the DGA to go up. But and that really was the real question is. But I realized that it's right there. It's betwixt and between right at the moment. So.
Yeah, I don't think I'm going to be able to, let's see if I'm lucky enough to pull. I've got a chart that's a normal seasonal pattern on natural gas. I wasn't able to pull it up in time. I'll do it for you tomorrow, though. So in between the 1 to 2 o'clock, I'll do it during the first segment for you so you can catch that. And I'll just show you what the natural price pattern is inside natural gas this time of year. All righty?
Thank you very much.
You bet. Thanks so much. Stay tuned, folks. Our man David White, he'll be up next. It is Tuesday, so we got the Tom O'Brien Show and Andy Hecht. Have a great Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.